Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video, I'd like to go through what happened yesterday in the US E-minis. Particularly, I'd like to focus on the NQ, mainly because yesterday was such an amazing day. There's actually far more for me to talk about, or I could talk about, than I have time in today's video. So let's have a look and see what the NQ did yesterday. At first sight on the automatic setups, it doesn't seem like there was a lot going on. A potential TS3 buy here that basically only went up to the 100% initial risk level. So now I want to take this to the advanced levels, and this is what we do in our MTPredictor training. In other words, we take MTPredictor to the more higher levels using the more advanced tools in the software. So the first thing we do is we look at the 15-minute chart, because we always look at the higher time frame. So here's the 15-minute chart. Now what we were talking about in yesterday's training webinar is we were looking at what the NQ was doing before it opened yesterday. So I want to use training mode here and go back to what the 15-minute swings were looking like before yesterday opened. So this is as of the close of the 3rd of December. You can see we had a pivot low here. So if we right mouse click, place the decision point on, this would give us our larger degree 15-minute support. If I now turn training mode off, you can see that the market came down and actually found support at this 15-minute low, sorry, this 15-minute DP support area here, which was the low just after the open. So what we were looking at in yesterday's webinar was because there was good larger degree support here, we were able to go down to a very short time frame. And I actually went down to a 1-minute time frame, which I don't do very often. In fact, I do it very rarely, and only when there's a very clear picture of the larger degree trend. This is the only time I go down to such short time frames. And what we were looking at was here was our 15-minute or larger degree support. This defined our important low. We then had an initial rally of the important low. In Elliott wave terms, this would be a wave 1. We then had an initial correction to that initial rally. In Elliott wave terms, this would be a wave 2. The wave 2 subdivided into an ABC correction. This gave us our TS1 setup. If I place the analysis on here on this blue buy bar, you can see it gave us a standard MTPredictor trade setup. However, because this was an important low, this was wave 1, this was wave 2, we're therefore anticipating at least a wave 3 kind of swing. So that means our target would not be our first minimum wave C WPT, which is here. It would actually be our typical wave 3 WPT here. This is what we call our holy grail trade setup, because we are trading the wave 3, which in Elliott wave terms is the strongest and longest wave in a completed 5-wave sequence. So it's the best trade setup in an Elliott wave, completed Elliott wave pattern. The result here was a lovely 7.9 hour profit. As the STF was strong, once we got to that typical wave 3 WPT, you may have wanted to perhaps trail with the ATR stop and increase the profit slightly. But even at the first typical wave 3 WPT, a 7.9 hour profit would be absolutely brilliant. Remember, we use correct position sizing to vary the number of lots, contracts or shares to keep our initial risk small under control, and hence our profit is large in relation to the initial risk. Here, turning initial risk of just under 2% of a sample $20,000 account, $360, into approximately $2,800. So a lovely trade here first thing in the morning. And it was all set up because we knew the 15-minute support zone was coming in here, and that was there in advance. Let's now go down to the, let's go back to the 15-minute chart. Now, sorry, that does scroll out. Right, I'll just take that one off because we're finished with that. Now let's go back to the last swing. This is the last swing here down into this low. If I place a DP off here, this is what we teach. We use the last swing to the high or low. You can see that went up and actually caught the high of the day there very nicely. Remember, these DPs are on the chart in advance. That's before the market even gets there. After the market made that high and started to come down, the DP placed off this pivot here, again in advance, as you can see, caught the low. So now these are 15-minute DPs. Let's go back and see what that means on a 3-minute chart. And there we go. Defined the high of the day and defined the low of the day. In fact, caught them absolutely perfectly. So how do we interpret this? Well, remember I said about this TS3 buy setup that only went to the 100% initial risk level here earlier in the day. earlier in the video, can you now see, because this was a 15-minute resistance and the market was anticipated to go down to your 15-minute support, this tier 3 buy setup would now be against this downtrend. So it's against the larger degree trend, so you would either decide not to take it or be more aggressive with your trade management. In other words, when we get to the 100% initial risk level, which we did, bring your stop to break even. So this could have been a break even trade. So this is a good example of how the larger degree trend using the DPs on the higher time frame can help manage and also avoid what would otherwise be losing trades. So a good example of some more advanced trade management there. Just going to take off that analysis, and I want to have a look at another trade setup now as we came down into the low of the day here. If I now move over to the volume, you can see that we had what we call a high volume VSA spike. This is indicated by a red bar on our volume. When do we use these? We use these when the bar or the price bar exceeds an important high or low. And if I now put a low tag on this pivot here at the low of the day, you can see that this bar obviously went through the low of the day and looked like the market was now making new lows. Amateur traders see this as an excuse to sell because a break below a new low or another important low on higher volume they think is selling, and therefore they want to go short. However, if the very next bar fails to follow through, which it did, it means that this increased volume here in this first bar is not selling, it's actually the professionals coming in and buying. In other words, this is a classic fake out used by the professionals to trap amateur traders. And the beautiful thing about MTPredictor is when these fake outs happen, they normally reverse at our DP support or resistance zones. So therefore we have an idea of where they're going to unfold. So how can we trade this? Well, we know that because the fake out came in here and reversed at this DP level on our high volume VSA spike, we can then assume that the professionals are now coming in to buy this, therefore there's going to be a strong move off the low. How do we trade this? Well, we look at the last swing into the low, which is a technique we use a lot in MTPredictor. So we come back to this pivot, right mouse, place our DP on the chart. Again, this is on the chart in advance before the market even gets there. This gives you the target zone. If we now set up a trade to buy above the high of that blue buy bar, protective stop one tick under the low, and we come up to our target price here at the DP, you can see that that would have enabled you to take a nice long trade there to then catch a potential 3.2 hour profit. So there you go, long off what was the low of the day. So this gives you an indication of not only using the higher time frame on the MTPredictor charts to able to catch some more advanced trades, like this holy grail trade we had here early in the day, which was I think is one of the best trades in the book. That's why it's my favorite particular trade, but also to help gauge the larger degree trend, to help you avoid what would otherwise be losing trades. And also here was a great example of our VSA trade setup here that allowed you to catch that long trade there off the low of the day. So basically most of the trade setups that we do, or most of the advanced trade setups that we do in MTPredictor, were all shown by just the one day yesterday, which was the 4th of December on the NQ. So I just thought this was a good one to focus on because it shows you what's possible with MTPredictor, and more importantly how the more experienced users can actually take MTPredictor to higher levels by using the higher time frame, the more advanced trade setups, and some of the other things we do in the software. So a really good day for MTPredictor yesterday on the NQ, and hopefully this video has given you a good insight into what is possible with the tools in the MTPredictor software program.